Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 0.46% to 31,033. Ethereum up 1.26% to 2333. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Please consider sharing and liking this video, and also subscribing to the channel. We would love to have you as part of our globally extended KS family. We've just done a quick run through the crypto market, and we can see that there's been quite a bit of green in the market, but also Luna has been very, very heavily hit. We'll talk more on Luna later on in the video, and we can see UST is trading at about 0.89. I've left helpful links in the description of this video, and you can always reach out to me at any time and contact me, direct message me on Twitter. I would like to thank everyone in the community who reached out and said congratulations, and also on Twitter and also the other social network platforms for Kate and I getting married on the 9th. I just want to say thank you to everyone. And Kate is so supportive of what I do here every day. She absolutely wants me to continue to put out these videos. So even though I'm on my honeymoon, I will continue to do this. And there were just some amazing comments here, and I want to thank everyone so much. There's so many people I want to thank. Just know that I thank you very much from the bottom of my heart for being a part of our global family. And that is why I get up every day and do these videos 7 days a week. Even if I'm getting married or I'm on my honeymoon, it doesn't matter. Christmas Day, Easter, doesn't matter. Weekends, I'm always doing this because I want you to have the very best information and knowledge that you can get. I also believe very much in positive excellence, and keeping my promises is a very, very important thing for me to do. And I also feel it's very much like talking to family every day. It's just beautiful to see your comments. And I love what Hal said. I knew there was a reason for today's gift in the markets. Now I understand that it was a wedding gift. What is Al talking about? I'll show you. Al is talking about this wedding gift. It was just a beautiful BORSOG day. Or even better, as Dream6 said, it's a Boar Day, which is a buy on red day. And to all the CTKS ambassadors, you're just beautiful human beings. It's just a privilege to know you. And of course, I feel exactly the same way about our beloved global extended family. It's just wonderful to see you every day and to get an opportunity to comment. And I'm finding I'm a little bit busy at the moment, so if I leave you a heart and a like, it just means thank you so much. And I've seen your comment, and I just appreciate you all so very, very much. Crypto technical analysts believe in real wealth and maintaining a positive excellence life trend. That's one of kindness, integrity, decency, inner and outer peace. Money comes as a byproduct of doing the right things. Money should never be the focus. It always should be the result of doing the right thing. And what is doing the right thing when it comes to crypto? Crypto technical analysts scientifically track investor attention. That's measured by price. Price is reality. Future promises always sound great, but reality is what we focus on. The first thing we understand, if we don't have the knowledge, we're going to make losses. If people leverage trade, they're going to wipe out their accounts sooner or later. It's just built into the system. A lot of people, when they get into the crypto market to start with, they want to just buy and sell. They want to say, where's the level? What do I buy at? What do I sell at? Without knowledge, you will lose money. So what is that knowledge? The first thing, we must absolutely understand how to mark up their charts. The charts in crypto are exponential by nature. They implode and explode. What you've just seen with Luna is an implosion. This happens all the time in the crypto space. It's nothing like the stock market. It's nothing like Forex. Crypto is its own animal, its own market. After you've finished marking up your charts, we look to outside world events. We actually go outside the crypto market to check the stock markets, collect probabilities, and check world events. Many people think that they can just stay inside the crypto market. That is a license to lose money. You always need to do really, really good detective work. Crypto is a really small market, and it's influenced by government policy, external events, black swans, so many other things. We must always be mindful. Then we come back into the crypto market and find the market's focus, understanding that opportunities reset daily and enhancing our pattern recognition. We enhance our pattern recognition because we're always looking for the next thing to buy. Before we buy and sell, we must master emotional control. Emotional control is so important in crypto. It's your emotions that will cause losses. And a lot of people don't understand this. They think if they just have a buy level, have a sell level, have some kind of target, they'll be safe. Absolutely not true. You're only safe if your mind is a diamond mind. As one beloved CTKS ambassador said, we are immune to fear. We are inoculated against fear. We basically see red in the market and we look at it and say, wow, that is an opportunity. But there's very specific reasons that we look at it like this. Coming from a mathematical background, I'm all about running the numbers. Then, when we actually have our emotional mastery in control, because professionals are not emotional, we get into the buying and selling. Buying and selling, there's so many ways to buy and sell in the crypto market. That's like just literally color palettes. You can combine any strategy to work in any market. And we love BORSOG, buy on red, sell on green. But that's a concept. You always need to know how to actually do that. You have to have the knowledge. You'll find that you'll learn so many rules inside the masterclass, and I scatter those rules outside the masterclass as well. Being in the markets for so long and coming from a traditional finance background, my degree is in finance, I know how the markets and how institutions work. They want to get you highly emotional. They want you to put laser eyes on your profile before they tank the market. They want you to run out the door before they turn the market around. Smart money is not emotional by nature. They're always cool, like this little guy here. They don't get angry. They don't have anxiety. They don't go through denial or panic or capitulation. They know what they're doing. They're professional. And that's what I do here with you every single day, 7 days a week. I try to give you a facet of the diamond of how to think like smart money. If you're going through this emotional roller coaster, it's really, really bad for your health, and it's very bad for your profitability. As a community, we understand Rule 570, psychology sets profitability. I've been showing this little cartoon recently because I think it's really, really important. As price goes up, the psychology of retail investors and traders is pretty happy. They're looking great, and they're putting their laser eyes on when it comes to crypto. But what happens when it hits the top and it starts to come down? They run, and they run fast away. Now, what is actually happening here? This cartoon doesn't depict smart money. Smart money is coming in when prices come down. They have no problem catching a falling knife. In fact, you'll see that institutions are always in the markets. It doesn't matter, bear market, bull market, it's irrelevant to them. They're always present. They don't close up shop and tens of thousands of people go home. What you actually see is that they're always buying falling knives while everybody is running away. Now, why do they do that? Because they know how percentages work. And we've talked a lot about percentages in the last couple of videos. A lot of retail investors and traders believe that they should buy the bottom, But how can they buy the bottom? They're not there. And what we see is when they come back into the market, they've come back into the market when the price has gone up substantially and they're waiting for the next correction. And what do? They're buying on green, they're selling on red. They're buying on green, they're selling on red. What's they going to do now? They run away. This is what we always see inside financial markets. Smart money thinks in the completely opposite direction on this. When people get into the market, they want to buy the bottom and sell the top. But the problem is, when the bottom comes, they're just not there. And then they get really angry that they didn't buy the bottom. But how can you buy the bottom if you're not going in? And this is why we need emotional mastery. It's really, really important. One thing I said is that we mark up our charts and then we look to outside trends before we go into the crypto market. Now, why do we do this? Why do we need to look at anything other than the crypto market? Or why do we look at the crypto market at all? Why don't we just look at that beloved alt? We always have to gain context of where we are inside a market cycle. And the market cycle is bull market, bear market consolidation, bull market, bear market consolidation, bull market, bear market consolidation. A lot of people think that we're in a bear market, this red area. I don't believe so. What has actually occurred? We've had 5 black swans attack the crypto market, but they haven't just attacked the crypto market, they've attacked all global markets. If you look at the Bloomberg Global Aggregate Total Returns Index, you can see that the Total Returns Index is unlike anything we've seen literally before. The KS model is incredibly powerful. It breaks up the psychological components of price action into 3 distinct areas: bull market, bear market, consolidation. And what we can see here is there's also a red line. That's the buy on red. When we get down to these prices, what we see is price is caught by the red line and it tends to jump. This is really, really important. It can go below the red line. Don't forget that as well. But this acts as a magnet to the downside. And what about the green line? That acts as a magnet to the upside. We can see that we're so suppressed in terms of price. Why is that? Because we've had all sorts of black swans, just one after another, after another, after another. And that's invalidated pretty much all the crypto models across the crypto space. But it's also invalidated stock market models, it's invalidated forex models, it's invalidated pretty much everything. And this is something that people need to keep in mind. There is no certainty inside financial markets. If you seek certainty, you're going to be in trouble. Back in February, I said that the victim of Russia invading Ukraine was the KS model. It became invalidated back then. But there's been so many invalidations of all models across the board. And one thing to bear in mind, a lot of people don't like me talking about this, but I have no idea why. On May the 9th, there was Victory Day in Russia. Russia has been making threats about nuclear war. And Vladimir Putin is basically getting backed into a corner. He's put everything on the line. He needs to win the war against Ukraine. And his ministers have been threatening the use of nuclear weapons for many months now. This is not new news. And if we look at what US intelligence says, Putin could use nuclear weapons if he felt war was being lost. And Putin is preparing for a prolonged war. He thought that he could go into Ukraine and conquer it very, very quickly. And a lot of people thought that that would be the case, but the Ukrainians thought otherwise, and they've put up a heck of a fight. Vladimir Putin is not making that much progress in the Ukraine. A lot of people actually don't know that when people protest in Russia, protests are illegal and those people go to jail for protesting. Russia's been threatening nuclear war for quite a few months now, and it basically said if you, for example, if NATO gets on the side of Ukraine, Russia can and will use nuclear weapons. There's been that kind of posturing since before the war started. And this is something people don't realize, or maybe don't pay much attention to, but the financial markets pay attention to it. And we can see all this suppression in price. We've had so many black swans in this period of time, but we know all the markets are going through this kind of retracement. Just keep this view in your mind. If all the markets are coming down, and Bitcoin is just one of those markets, and it's important to understand that price is always moving in a wave. We've had a big correction down. We would anticipate the upside of that, but it doesn't mean that's going to happen immediately, and it doesn't mean there's not more turbulence ahead. The KS model is the only model I've seen that actually registers global events and bakes things into the price, where people can look at something and say, okay, based on past black swan events, what do we anticipate? And we've had so many all at one stage. So where could price go to? Let's take a bearish scenario, and we don't care about bull or bear, we just care about BORSOG. But if you're a long-term investor, where could things go? Keep your eye on this particular red number right there, 25891. And Masterclass students, you receive this chart in TM2. That is the value of this red line right here, 25891. That's an absolute worst case scenario. Now people look at this capitulation back here and say, but it happened there, it can happen again. And of course it can happen again. But what was this? This was the COVID US liquidity crisis, and the world basically shut down. And that, if you think about it, that's about one of the worst kind of black swan events that you can ever get. And we didn't experience one of these since the pandemic, the first pandemic, the great influenza pandemic. What we believe in, smart money believe in, is a BORSOG market, a buy on red, sell on green. I'm actually waiting for the main markets to normalize. They're really out of sync at the moment. And if they're out of sync, they're very hard and difficult to forecast. What we see with these black swan events, they push price down and extend the cycle out. And a lot of people have been talking about extended cycles. I think the important thing to note here is what the technology is. What are we actually looking at? What does this chart actually tell us? Underneath my analysis of any chart is the driving force behind that analysis, which is price. If we look at the cryptocurrency market, we can see it's really tiny compared to the stock market and the bond market globally. And it's actually become a great deal smaller, actually down to 1.39 trillion. But this is just inherent fluctuation in the markets. We always get black swans, we always get recessions, and we get booms and we get busts. That's just built into the fabric of the economic system. But one thing is really special. Cryptocurrencies are the upgrade to the internet. They take it from Web 2.0, the centralized internet, to Web 3.0, the decentralized internet of money. It's going to fundamentally change the world. And what we can see, we're so early in terms of adoption, in terms of growth. People are just starting to understand that crypto is something that can become mainstream. And we should never forget that Fidelity has opened the doors to institutional investors investing pension funds into Bitcoin. That's very special. That's probably the most critical signal that we can get from this market. And one thing that institutions love to do is they love to drive price down and get a whole lot of buy orders filled. And that's what they do all the time. Remember, when the floor is empty like this, the floor isn't empty. It's full of institutional buyers. And when the price comes down, they're forcing the price down to make people flee. Why? Because they want to buy what people are selling. I believe the markets are going to be pretty choppy for a while, so the key is to BORSOG. Buy on red, sell on green. But you must have the knowledge of what that means. A lot of people say that we're going into recession. Actually, the truth is the US economy, which is the largest economy in terms of market capitalization in the stock market, is just mid-stage. It's just getting towards expansion. And if we think about that, recession is over here. And what countries are in recession? Well, China's just coming out of a recession, out of a contraction, and will enter into recovery. This is really good, and this is what a lot of people don't talk about. I guess that's why Fidelity Institutional looks at these factors. It just cuts through the fluff. We still continue to see companies beat on their earnings in earnings season, and this is really important. 71% of companies have beaten. If there was only 1% or 10% that were beating, that would show that economic activity was really weak. This shows that economic activity is actually really strong. And we can already see that because we're going into expansion. Inflationary pressures are very high in late stage expansion, but this is to be expected. This is the business cycle. It's always going up and down and up and down and up and down. That's what the business cycle is about. What do we see in the main market? Well, we can see that the VIX spiked, hit resistance and came down, and the Nasdaq 100 actually hit that big support area and has bounced from that low. Price is always moving in a wave. Many people thought it was game over when the Nasdaq was coming down like this. Then what happened? Price waved up, formed a lower high. So that is a downtrend market. But what do we see here? We've hit a very strong area of buying interest. I would expect that the Nasdaq 100 would come back to at least this resistance line. A lot of people don't think that that's going to happen. They think it's just going to fall off. But price is always moving in a wave. And when we understand this, things get different. It doesn't mean things can't get overextended, as we've seen with bond prices. They're coming down. But it looks like they're in the process of normalizing out again. Bond yields have gone parabolic. That's also not healthy. These are overextended markets. And when we look at the DXY, it's also significantly overextended. It may be in an upward trend, but the concept is that when it gets too highly overextended, like gold did back here, you get a very sharp reduction. For example, like what oil did back here, sharp reduction. You must always bear in mind that when things get too overextended, they snap back very, very quickly and often incredibly brutally. And we can also notice that gold has been selling off. So we're getting a lot of conflicting information. And this is one of the hard things. We need to do a lot of detective work with the markets. And we know that the main markets actually impact crypto. We know that through Rule 225. Bitcoin cannot escape the stock market's gravity, but there's so much more to this rule. In the masterclass, I discuss this fully. What people are really worried about is inflation. Because of inflation, the Fed's balance sheet is decreasing. The amount of monetary stimulus within the economy is set to decrease because it's pushing inflation up. What do you see here? A big rise in inflation, a parabolic rise. Remember gold, remember oil. Soon, remember the DXY. Soon, remember bond yields. Soon, remember bond prices. This is why we actually look at these unsustainable moves and know that they have to retrace. And what do we see here? The 10-year and 5-year break-even inflation rate are coming down. This is a sigh of relief to the Fed, and that means they can loosen, not go so tightly on interest rate increases. And when we look at M1 money and M2 money stock, they're increasing at the moment, but these are quite old indicators. We need for them to update. And we can see that Bitcoin and the Nasdaq have sold off. But this is a very good thing from the stance of federal policy. When the break-even inflation rates are coming down, that means that the Fed policy is working. And when we look at gold and silver, they're both coming down. And this is actually really good. If we had a spike in gold prices, that could be a flight to safety. We're not seeing it. We can see that the DXY has gone up significantly. But why are we talking about this? We're a crypto channel, right? Well, it all is very, very applicable, and you need to understand much more than just your beloved alt if you want to be profitable. Let's have a look at how Bitcoin's price is reacting, and this is the Nasdaq 100. We can see the Nasdaq 100 came down, went up, came down, went up. It's actually forming a bit of a channel, a bit of an uptrend here. What do we see with Bitcoin? It's following a similar uptrend channel as well. This is really important to keep in mind. There is a lot of cross synergies inside financial markets. But why are we looking at Bitcoin? Why don't we just ping to your beloved alt? Because there's a rule for that. And that's rule 45. No alt can escape Bitcoin's gravity. If you look at your beloved alt and say, why did my beloved alt go down? Because you're always happy if it goes up. That's not a bad thing. But when it comes down, you can be pretty much assured 99% of the time that Bitcoin has actually driven it down because of its gravity. We see it here every single day. You can see we're under a major resistance level. We need to get over this particular level. A lot of people said that they felt it could come down to D and possibly to E, or even below E. We've seen it mainly hovered in C, and it's just like little bit recently, literally in the past sort of 2 hours, it's just come down into D. This shows you some really, really good things, and that's why it's great for you to seek to predict A, B, C, D, or E. And it's a really good thing, and it's not to be right or wrong. That's not what our community is about. We're a really loving group of people and very kind people. It's all about learning. Let me know in the comments, where do you think it's going to be in another 24 hours? In C, which is just kind of going flatline, in B or A, which is going up or really up, or in D or in E, which is going down or really down. Please let me know in the comments. It's so good for you to do this each day. It will absolutely help you understand the markets better. Having a look at the longs and the shorts. The longs are in this green line. The shorts are in this red line. We've seen the shorts come out of the market, but the longs continue to enter. Across the past 24 hours, there's been 556.5 million in liquidations and nearly 195,000 positions liquidated. Friends don't let friends leverage trade. If you're leverage trading, what actually happens is the market is already against you, and it doesn't have to move much to liquidate your position. But a lot of people think, oh, it's okay, Ken, I'll just lose whatever I put in. When you actually leverage trade, if you go short, you can lose far more than your account. You can end up owing a lot more money than you put in. Please be careful. Friends don't let friends leverage trade, as a beloved CTKS ambassador said, and please don't do it. It's a license for stress, a license for sleepless nights, and more importantly, it's a license for loss. And you can get liquidated in both directions. Even hedges don't work. Going long and going short simultaneously can take you out in both directions. You can lose twice. Please be very, very careful. Keep away from leverage trading. Just buy at spot. Let's have a look at liquidations across the past 24 hours. We can see total liquidations across the past 24 hours were about 59% long. What about the past 12 hours? Just a little bit more, 63% long. 76% long in the past 4 hours, and the past 1 hour. It's all changed around because people thought it's certainty, I'm going all in and more. As many influencers say, just go all in and more, buy at market, and they actually do it. Professionals never buy at market and they never go all in. We've seen nearly 54% liquidations being short. Professionals buy at support levels down from the current price, and they can buy a long, long way down. And that's all about making volatility your best friend. And as we can see here, there's been about a 50-50 split between longs and shorts. And you can just see that from the chart. We had a lot of long liquidations yesterday, a substantial number, and at least a lot of volume is starting to return to the crypto market. Things are very, very volatile now, and we see prices coming down. What are people going to be doing about that? We know what people are going to do. They see the price come up, they're very, very happy. They're fantastically happy. But when it comes down, they abandon ship. That's what they're going to be doing, just in the opposite time of what they should be doing. They should be leaning into this. And people say, but Ken, I don't know what the bottom is. Well, it's not important. The bottom is not important. The only way you could buy a bottom is to actually be buying the bottom when it's coming down. Very, very few people have the nerves required to do that. And it becomes just an understanding, not nerves, as you progress through decades and decades in the markets. And this is always phasing people out. When price drops, people run for the hills. If you feel like running, you should be buying now. You can see it. This cartoon tells you everything that you need to know about that. And this is exactly what professionals do. We get very, very happy when we see prices tanking. Because we understand Rule 7, buying creates profit. If you're buying on green, the percentage is already turned against you. And if you're selling on red, the percentage just turned against you again. For example, if you saw price coming down and down and down and down like this, would you actually want to buy? A lot of people would be heading for the hills. That cartoon would be playing. There would be crickets on the trading floor, retail crickets. But the smart money comes in when this is happening. But why do they do that? Isn't that silly? Well, what happens is that price is always moving in a wave, and this catches a lot of people off guard. And when you actually see what happens over time, the more you're in financial markets, and don't forget crypto is an incredibly volatile market. You can see down here, people were saying, I'm running from the floor. I'm getting out of here, just like that cartoon. Keep playing that cartoon in your head over and over and over again to make sure you understand what smart money does. Smart money enters the trade when everybody is leaving, and it rides it up. Now, what happened between, for example, this peak and that bottom? We actually came down between those 2 points, 54.76%. You could say we came down a little bit more down here, but let's just ignore that because this is the majority of price action. So when the price recovers to this level, does it go up 54.76%? Because if somebody bought at this top, and that can happen because you know how the markets work, that cartoon tells you so very, very much. It would just increase 54.76%. That means you wouldn't lose any money. Is that correct? Please let me know in the comments on YouTube. It's good to talk about percentages, especially for the new people joining our beloved community. So actually, it just doesn't recover 50%, 54.76%. It comes up 128.21%. That's why smart money, investors and traders, retail investors and traders, they actually buy the falling knife because that's when the percentage goes in your favor the most. Retail is heading for the door. Smart money is heading for their pockets. And literally, the redder the better. That's what it's all about. Or I can say it in a very English accent. The redder the better. Because it's so true. When it becomes really red, that's where you want to get in. And you get these pullbacks along the way as well. This is why we have a 10-5-10 fund. If you bought something at $10, it went down to $5, you lost 50%. But from 5 back to 10 is 100%. You can see how it plays out. And if it goes below 50%, the uptick is even higher. That's what we're after. That's why smart money institutional investors and traders, and we know all investors become traders anytime they buy or sell. But if you don't know how to trade as an investor, you will hodl because you just simply don't know how to exit. And that's very, very common. And that's a big problem with investing. Combining diamond hands with a diamond mind is the way to go. Just become an unlimited individual. I would suggest taking a small percentage of your overall investing portfolio if you don't trade. And it's not like you're day trading or anything like that. You're actually trying to understand the underpinning mechanics of price action. And this is exponential price action. I saw so many people when we had this particular sell-off in Bitcoin, and they were talking about if price just increases by X dollars per day. It never goes that way. This is an exponential market. There's no linearity in crypto. It's all exponential. Implosions, explosions. And one of the things that often happens, people say, I missed the bottom. And they weren't even buying as the price came down. So this is a kind of a wishful thinking. If people want to strike the bottom, they have to be in the market when it's collapsing. And because these collapses, price is always moving in a wave, but you have to know what you're doing. That's why it's really important to be kind to yourself. If you're trying to pick the bottom, that picking of the bottom is a non-professional thing to do. Professionals don't care about bottoms. They care about participating. They care about correct technical setups. And sometimes things don't go in their favor, but they have patience because they've bought at spot. And if you've bought a really good project, something with network effects, something has an actual use case in the world, you're okay. And Bitcoin is the best one for that. But you can see here that buying on the red and selling on the green is very good. But it's not a simple thing to do. You need a lot of knowledge. And that's what the CryptoTradingKS Masterclass is all about. I'd like to show you something about the bottom performers over the last 7 days. What's this one down here? This is Luna. Luna's come down substantially. The percentages are now moving in our favor with Luna. What about ANC? That's collapsed substantially. What about GMT? That's come down as well. And what about APE? That has also come down. APE, GMT, Luna, even ANC to a degree, were all really, really good projects, especially APE and GMT. They were going gangbusters. But what you will see in crypto all the time, as soon as you feel certainty in a specific direction, the market has probably already turned against you. So looking at the top performers, Tron, TRX up about 8%, ZIL 1.3% over the past 7 days, Waves 0.25%, and then they go negative. And over the past 2 weeks, we can see Luna is now down over 80%. Is this something that you should be involved in? And having a look at Tron. Tron over the past fortnight is up 24.35%. The rest of them are pretty much negative. Something to note on Luna, and it's really interesting to discuss Luna a little bit more in depth. Username said, "Hi, I remember from your previous videos you were always saying for a long time about Luna that whether we are going to be able to handle it if Luna goes back to 35 or lower. You were so right. We just saw it last night in that UST Luna crash. Indeed, you were the only one I've heard that possibility from. By the way, congrats." Thank you, username. This is really important to understand. Luna was becoming very overextended. And Amy managed to buy the dip all the way down to $27. Well done, Amy. Now, what is everybody talking about? Let's just go through the Luna chart that we go through each day. We can see Luna was on a rocket. It was going up and up and up. And I was saying about this time, be careful, because what happens is price is always moving in a wave. And what did it start to do? Of course, it's always moving in a wave up and down. And then we saw something really unexpected. an absolute implosion. But then again, was it really unexpected? The Masterclass students know that we have 10-5-10 or capitulation level buy lines, and I've had orders in on Luna. I really like Luna, and I believe it's here to stay. What you actually find is that these price momentums can go very much against, and I'll just explain that in a minute, but I have buy levels all the way down to $7, and I've had them there since we talked about the price up here at around the over the 100 mark. And this is something to bear in mind when you look at what is happening with any of these cryptos. You want to be prepared for these dramatic implosions. Remember, crypto explodes and implodes. It's not like the stock market. It's not like Forex. It's not like any other market that has ever existed before. It's very, very special. But you need diamond hands and a diamond mind. You need them both together. One without the other is not where you want to be. You want to combine the strengths of an investor and the strengths of a trader together. Let's have a bit of a deeper dive look at Luna. We can see Luna over the past 35 days approximately has come down 88.55%. Now, if we actually go forward and come back up to that particular price, what is the recovery? Is it 88.55%? No, we know it's not. It's much in excess of that. It's actually 772.48%. And price is always moving in a wave. We saw recently that Luna came down 82.22%. But then it came up 2,957%. These capitulation buys are money in the bank. And what typically happens, people run away when it capitulates to the downside, and when it capitulates to the upside, everybody's all in and more. You have to be really careful. This buying on red is a very, very cost-effectively proven way to lower your average buy price, but to also participate in profitable trading. And that's what it's all about, because in a way, all traders are investors anytime they hold. And what did we see here in Luna? Basically, it came back to this lower support level just here, hit it and bounced. And it did some bounces up along the way, and people scalping this particular crypto would have done really well in this process. In the timing section, TM14 and TM15, we look at stablecoins in the masterclass, and I say stablecoins are not really stable. They're not stable at all. A lot of people think that a stablecoin just automatically just keeps a $1 peg. It doesn't with Tether, it doesn't with USDC, it doesn't with BUSD, and it doesn't with DAI. What you will see is that there are big gaps. This pegging and depegging always occurs. For example, you can see with Tether was at one stage worth about $1.50, where it should have been worth about $1. Well, it should have been worth $1. And USDC came down to about 20 cents. BUSD came down, well, it's a bit more stable than the others, but you can see these spikes. And what about DAI? DAI is up and down and all over the place. What you will see, stable coins are not really stable at all. They've never been stable. It's just that people are finding out about it. So the question, when we look at Luna against USDT, it's all about the algorithmic stablecoin, a new type of stablecoin, just going through its learning phases, its teething process. And this happens even if it's not an algorithmically based stablecoin. And you can see that happen with USDT, Tether, and USDC Circle. This is always on, and these are short-lived moments in history. It always reminds me of when oil absolutely tanked and one particular oil went negative. That's the time to get in, not the time to abandon ship. And a lot of people had to abandon ship because they were doing leverage trade. But the concept is, when we look at something like this is an absolute buy opportunity from my perspective. And that may not be a buy opportunity for a lot of other people, but from this perspective of coming down so hard, so fast, so quickly, and knowing that Lunar Foundation Guard, and we've talked about in the news segment, it's a really highly backed entity. It has billions and billions of dollars. They'll sort out their issues just like USDT did and USDC did. It's just early days, and that's the thing with the crypto market. Let me also share a little bit of experience from the stock market side. Stock market trading platforms actually close down when you get capitulation events. They go offline. They say the service is inaccessible. Just think about it being the same kind of thing in the crypto market. I believe that Tether and USDC overcame their issues. Luna, UST, will overcome its issue as well. This is just, I believe, just a perfect time to get in. What could have actually happened? There's a lot of hype and media, negative media around this. People love to throw a bit of a slant. It gets eyeballs. It gets people reading articles, so they make a big deal out of it. But the truth is, this is just part of when the markets get too overheated. Things crash, and they can crash hard, but they also recover quickly. Remember, implosions, explosions, implosions, explosions. I would be very surprised if we didn't see an explosion of Luna, and many people will just be waiting for it to come back to that higher level around the 120 mark. And what actually did this to Luna? Bitcoin did it. Naughty Bitcoin. And Bitcoin did it to all of the crypto market. When Bitcoin comes down, no alt can escape the gravity. Look at Ethereum coming down. Binance Coin coming down. XRP coming down, ADA coming down, Solana coming down, and coming down hard. And this is what we see all the time. AVAX also coming down. But you're putting the percentages on the right side of yourself when you actually buy this like this. People feel confident when the price is going up, but that confidence is the wrong kind of confidence. You want that kind of green confidence on a red day. What we're always seeking to do is to implement Rule 359, be on the right side of the percentage. And you can see when the market clears itself, like this, when people just are running away, that's the absolute wrong time to run away. We should be running into the markets when this happens. But instead, people want certainty. They want the prices to go up. They don't want to make a loss. And they end up often actually buying near or even at the top. And when price comes down, they actually capitulate. They say, oh no, I got it so wrong. I need to sell. And they're lovingly selling into the arms of smart money and institutions. Become an institution of one. Know that when everybody is running away, that's when you should be in the market, because these are when the gains are. Remember Luna coming down so greatly, but when price recovers, that is an incredible percentage gain. And you don't even have to wait for price to recover. If you're getting into Luna around now, you've done really, really well. You can ride that one out. This is why we talk about the 10-5-10 fund, because it's not about buying at 50% down. It's buying at levels of capitulation down. That's why I was putting orders into the market way, way, way down, as low as I could possibly get them. And the Masterclass students know about that. When I actually did the trades on Ethereum, those levels are crazy levels down when they were placed. But this is the way that crypto works. It's really important to be aware of that. Detective Kimball said, Ken, is Luna losing its peg not as serious as everyone is making it out to be? I don't think it's serious at all. I think it's just the nature of stablecoins. They do vary, and you've seen that with USDT and USDC. And When we think about Luna and UST, that's a very new concept. It has to be battle tested. It went through a battle testing round right now, and you can be assured that they're fixing things. And all of them have to. ADA, Charles Hoskinson wants to come out with ADA's stablecoin, and we're seeing many of the other ones wanting to come out with algorithmic stablecoins. The crypto community is just incredible. It's a collection of brilliant, brilliant people who put their minds into things, and together we can solve any problem. So Luna losing its peg, I say it's just part of market action. If Luna lost its peg on a normal trading day, that would be different. But we saw an absolute climactic breakdown in Bitcoin. So that kind of thing is to be expected. Thank you for your question, Detective Kimball. In the comments, please let me know, what would you feel about getting into Luna now? If you were getting into it the first time, or potentially if you're just adding to it. It's really important to understand when the percentages go your way in a powerful project and something can be fixed. That's very different from putting your money into alt number 19,001 or 19,393 as the case may be, because when cryptos are a long, long way from the top 100, anything can happen to them. But Luna is a crypto and UST is a crypto, and it's right up there in the leading ranks. It's good to keep in mind that UST is still number 11, and where do we see Luna number 22? So with all this in mind, perhaps you might like to leave a comment. Would you buy Luna at this stage, knowing that it's actually come down 66.29% in the past 24 hours? Or would you have another strategy? Please have a discussion with the community. And we're always very, very supportive of any particular position that people take. There's no right or wrong. There's just different levels of knowledge and different levels of focus as well. And actually discussing things in the community can sort many conceptions or misconceptions out. So please let me know. It's just a wonderful thing to talk with our globally extended family. I'd just like to send out a congratulations to Austin. Austin is getting married next month on June 19th. Congratulations, my friend, and lots of love to your beloved as well. I hope you found the content useful. Please consider sharing and liking this video and subscribing to the channel. We would love to have you as part of our globally extended family. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass, the tax software I use, and many other really, really helpful links. And please remember, only trade at spot. Give leverage a miss. It's not a recipe to make money quickly. It's a recipe to lose money very, very quickly, and maybe more than you put in. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.